Welcome to the C-Suite Series presented by Channelchek and Noble Capital Markets. Noble is an SEC-registered FINRA-licensed broker-dealer and a source of the equity research available on Channelchek. Of the 6,000 small and microcap companies listed on the site, today we're featuring Entravision Communications. Michael Kopinski, Noble's senior research analyst covering the company, will be interviewing CFO Christopher Young. As a reminder, Michael's research is available at no cost on Channelchek. Just type in Introvision in the top left company data section. And now, here's Michael and Chris.
Chris, thank you for joining us today. Appreciate it.
Hello, Michael. My pleasure. Nice to see you.
So, Chris, I was just wondering, can you give us a little history about Introvision, how it came to be, and what is it today?
How Entravision came to be. Sure. So Entravision actually was started at the behest of Univision. So Univision back in the day was owned by a gentleman named Jerry Perenchio. And Jerry had recently purchased Univision away from Hallmark. And Univision at the time was had a big station presence in a lot of the larger markets across the United States. They had both coasts. They had New York, they had LA, they had Dallas, Chicago. What they didn't have, however, was much of a presence in the smaller markets here across the country. And so Walter Ulloa, who was our founder and chairman and CEO, he had a competency in small market TV stations. He owned several small market Univision stations, and what he did was he cut a deal with Univision to be that small market, to create a small market Univision presence across the country. And what Univision did was they contributed some capital. At one point, they owned 30% of Entravision, and Entravision was really the one-off company rolling up, I should say, Univision station opportunities in the smaller markets where the advertising is much more locally oriented, right? It's a very different operation than a large market where most of your business is coming from the agencies. Local market sales was something that Univision didn't really want to roll up their sleeves and get into, so they had Entravision do that work for them. The original intent was at some point, once Entravision got big enough, that Univision would buy Entravision out, and everyone would, kind of move on accordingly. That plan never came to fruition. Univision continued to acquire. They got into the radio business with Hispanic Broadcasting Corporation in 2002. We had already been in the radio business, so at that point, when they bought that radio operator, we became competitors in many markets. And we've kind of been going along since as partners in TV, competitors in radio. But at its core, we're a Univision-oriented media company serving the Spanish language communities in the smaller markets across the country. And really, we were created at the behest of Univision, who found, to be a formidable national broadcaster, they needed a presence in the smaller markets, which is what we created for them.
And you have an interesting background, Chris. Can you talk a little bit about your background? I know it had some investment banking at some point. Can you talk about how your background and how you came to Introvision?
Sure. So as you said, I'm from the banking side of the business. I used to, in the 90s, bank media companies, outdoor advertising, television, and radio. One of my clients was an outdoor advertising company, made me an offer to become their CFO. That company was eventually purchased by a Spanish language media company called Z Spanish Corporation, and then that company was purchased by Entravision. So I have an operational background. I'm not an accountant by training. And it's interesting to see companies from a banking perspective, and then the eye-opening experience is when you actually land at one of those companies and have to help operate it. It's a whole different ballgame, right? So a lot of sweat, a lot of tears, and it's been quite an experience, but it's been a lot of fun, and I've thoroughly enjoyed it. I've been here since 2000, August 2000 is when I joined, so it's been 20 years. So
and as you said, the company has focused on the Hispanic community, and it owns TV, radio, digital media. What is attractive about the Hispanic audience, and why is Introvision uniquely capable of delivering that audience to advertisers?
Well, you have to understand it's the single largest ethnic group here in the United States, representing, call it 20-25% of the total population. That's going to be closing in on 30% of the total population in the next decade or two. It's a $2 trillion consumer spend market, right? That's the total consumption of the Latino community here in the U.S. So it's a very formidable demographic, and it's also a demographic that continues to grow. It's not dependent on immigration patterns, to grow as a demographic here in the United States. It's also a very young demographic. The average age of the Hispanic consumer here in the United States is 27 years old versus the average age of your general market population here in the United States is 42, right? So it's a very dynamic and diverse ethnic group that is a business model that has served us well as Univision and a handful of other companies.
You touched on this a little bit, but there's been a lot of political rhetoric around illegal immigration and those crossing the U.S.-Mexico border. Has this affected the Hispanic population growth, and to what extent has it affected the company?
Well, Trump's tough stance on the immigration, laws here in the United States haven't really impacted the growth of the demographic. And again, the growth of the demographic is just fueled by births. The migratory trends across the border have dampened somewhat with Trump's tough stance on illegal immigration. I think, if anything, what the current administration's efforts have done is kind of put a wet blanket on the local economies that we operate in. We're the largest media company operating on along the U.S.-Mexico border, from Tijuana all the way down to McAllen and Brownsville, Texas. And all of those markets have been hard hit because I don't think it's appreciated by the general population that there tends to be a lot of economic activity going back and forth on a day-to-day basis, not through immigration, but just people coming across the border to buy goods and services. That all has pretty much dried up, and it won't be until the new administration comes around and changes its stance on border crossings until we see that situation alleviated. It has been tough, but generally speaking, the demographic continues to grow at mid to high single-digit growth rates compared to the general market, the general population, which is kind of in a very low growth to stagnant growth mode here in the United States.
And Chris, you mentioned that Univision is your #1 network affiliation, and they just recently reported some very strong ratings. #1 primetime network among the coveted 18 to 34-year-olds, and for the 10th straight week. And I know that there was some period of time when Univision wasn't doing so well. And I just want to be clear that it's the #1 network on all of television in prime time, including ABC, CBS, NBC, and Fox. How does the network ratings affect Introvision?
Well, it's wind in our sails, right? Wind in our backs. Look, the rating story has been a very positive one for Univision, as you alluded to. They've seen ratings gains consistent for the better part of a year and a half. Now, that was before we went into the pandemic. The pandemic only, raised their game as far as viewership was concerned. You had more people at home doing what they're told, staying home, fighting the pandemic, and ratings continue to rise. So we've seen ratings, a solid ratings lift across just about every one of our markets, particularly in news, but primetime as well. And that's all good news. Now, the problem with the pandemic is you've got the consumers watching, but now you have to drum up the demand, right? And that's the battle that we've been fighting. Q2 was a tough quarter. We took it on the chin, but we still managed to, I think, like every other media company out there, like every company out there, not just media company, we've all had to make some tough decisions adjusting to this pandemic, which we did, and we think we're in good shape to weather this storm, however long it lasts.
And like many traditional media companies, Introvision made some investments into faster growth digital media. And unfortunately, there were some missteps there. And I was just wondering if you can just explain what happened and maybe talk about how your digital businesses are positioned now relative to some of the other data-driven companies that are out there. And so if you can just talk about your digital media strategy.
Yeah, I think we had some execution issues with prior management of our digital group. So we've made some wholesale changes with our digital group. We did that last year. We've now got Luis Balaguer, who's the CEO of our digital operation based in Barcelona. We've got a new CFO in the operation as well. And they've really risen to the occasion and helped us, A, streamline the company from an operating expense structure, and B, really promote and put forth products that are resonating with digital clients. And that's something that we're really excited about. Their core product is something called Smattix. It's a programmatic platform for mobile advertising. It's completely transparent. So when you're using this platform, you know what Smattix is getting paid, you know where you're advertising, you know exactly the profile of the consumers you're reaching. There's nothing, everything is completely transparent in a campaign. And I think that's what digital advertisers demand in this day and age. And that level of transparency is basically unheard of in the industry. And that's its primary selling point. And even with this pandemic, although digital the digital operation in general was negative growth in the second quarter, we're excited about the Smattix product. And we're excited about the digital division. We had to make some wholesale changes as far as management's concerned, but we feel that it's back on track, and we'll see how the next couple of quarters play out as far as profitability of the unit's concerned.
It would seem like you have a great growth opportunity there. Like all advertising-driven mediums, like you had mentioned before, Introvision took it on the chin in the second quarter. Revenues were down almost 35% due to COVID. What is notable, despite the huge drop in revenues, which obviously came very suddenly, the company managed to report positive cash flow in Q2. And this is pretty impressive because not all media companies were able to report positive cash flow.
Right.
Can you talk about the action you took and whether you anticipate that those actions will have any revenue impact on the backside of the pandemic?
Well, what we did, this reminded us a lot of what we went through in 2008, 2009. Although the one thing that was different is that it was just so sudden. We were having a breakout quarter through early March in the first quarter of this year, feeling very good about the year, feeling very good about everything that we were working on. And then the pandemic set in. And what we realized that we had to do right away is make some tough decisions. We furloughed approximately 20% of our employee base. Everybody took some pretty hefty salary cuts across the board. We cut our dividend in half. We cut our CapEx spend significantly. And what that has resulted in is just us operating on a bare bones structure just to weather the storm, right? And to quantify, you're talking about approximately $7 million in fixed costs per quarter that we've taken out of the model. And then you're also talking about, depending on what revenue does, another $3 to $4 million in variable costs that have come out. So you're pushing $11 to $12 million per quarter in expenses that have come out of the model. That's going to stay in place as long as the difficult economic environment persists. So you've got Q2 under the belt. We're in Q3 right now. I anticipate those cutting measures will be in place for Q4 as well. And just so 3 quarters, we've managed to take $33 million of costs out of the structure to weather the storm. And we'll see what that bodes for next year. But I think the one takeaway that I feel is going to be fairly consistent across corporate America is that everyone's learning to do more with less. Less resources, becoming more efficient. It's just, I can't help but feel that we're going to be leaner and meaner as a result of the changes that we've had to make as a result of the pandemic. We just need to wait out the storm.
Well, certainly it's going to could potentially show up in the numbers, because you indicated that your revenue trends are improving as you go into the third and fourth quarter, and at the same time you're operating at a much lower cost. So can you talk a little bit about what is driving the revenue improvement, and also give us your thoughts about the influx of political advertising this year? It sounds like it's going to be significant.
Sure, we talked at our quarterly call. Our pace for TV was a -8. Our pace for radio was a -34ish, I think, and digital was pacing in the -18, give or take. What's driving the recovery is really television. TV advertising has shown a significant return in third quarter versus second quarter, which was obviously the nadir of this process, at least so we hope. Auto has not come back to prior pre-pandemic levels, but it is coming back. Political is going to be strong this year, regardless of what this pandemic does. Florida is still a very, very hot market for political ad spend. We've got Trump spending, we've got Biden spending, and remember, we didn't have any Trump ad spend in the last election cycle. So the fact that he's in there now spending in Spanish kind of gives you a good indicator of what's to come as far as the presidential cycle is concerned. So everything is moving in the right direction. And to your point about the free cash flow, we'll take a look at our expense structure as the demand ramps up. But, from a free cash flow standpoint beyond EBITDA, look, my interest expense, I'm paying less than 2.9% on our interest right now. 1 month LIBOR is, I think, 18 or 19 basis points. So the debt has become very, very cheap. I am making a couple of bucks on the $134 million of cash that we have sitting in the bank. CapEx will be approximately $7 million, and cash taxes won't be any more than $3 million. So you're going to have, whatever EBITDA we end up generating for the year, you're going to have a very high conversion of that EBITDA to free cash flow. The question is what that number ends up being is anyone's guess, but we feel good about being able to weather this storm and keeping the financial progress that we've been working towards intact.
Let's talk a little bit more about that balance sheet, because like you said, $134 million in cash, that's nearly $1.60 per share in cash. You're free cash flow generating, in each quarter for the balance of this year. You're currently paying a pretty nice dividend, even though you cut it. What do you see as the capital allocation heading into what it looks like is going to be another strong cash flow period for the company?
Well, we'll continue to be mindful of our leverage as far as the debt load's concerned, and to keep that in check. We don't have any financial covenants, so we're not bound to that. But I just think being a prudent, managing the operations prudently, you need to be mindful of what kind of leverage you're looking at. There will be M&A opportunities even in this pandemic. There's some digital projects that are out there. There are a handful of broadcasting projects that may arise as a result of what's happening, in this economy. So we're mindful of the acquisition environment. So you've got M&A. The dividend, I think, right now is probably going to stay where it is, at least in the near term, until we get through this storm and we have that greater visibility on the other side.
And in terms of acquisitions, Chris, would those be more like 20, 30 million type acquisitions, or are you looking at more transformational type acquisitions?
Yeah, you're talking about smaller acquisitions where the risk, is minimized. Transformational acquisitions are always out there. You never say never, but right now the bulk of the work that we're doing internally is on smaller type of acquisitions that are really interesting. That could be transformational in and of themselves, but there's, the key is to, find the right operations that complement your existing infrastructure, and that's what we're working on, and time will tell. And
what's interesting is that the stock is bouncing off of recent lows, even as fundamentals seem to have improved. We've gotten through the worst of it, it appears, through the second quarter. And certainly your second half of this year looks much stronger. What do you think is keeping investors at bay at this point? Is it fear over COVID, or just the fear over the economy and how things might look? It just seems like investors not willing to look beyond, to the next quarter or even the second half of this year at this point.
Yeah, I think fear is a big part of it. Look, we're a microcap broadcaster serving a niche community who has been in the headlines as far as the current administration is concerned, and not in a good way. And that has had a negative impact on us. But you know what, investors, I think, need to focus when they're looking at our operation. Unlike any other broadcaster out there, we've got the best balance sheet in the business. We're managing our operations as efficiently and effectively as we ever have. This market will return as far as advertising is concerned, and when it does, we're going to be in better shape than I think anyone out there as far as our infrastructure is concerned to really capitalize on it. And the dividend is sound. We'll continue to tend to our nuts and bolts operations, and then also continue to look for acquisitions that complement our fledgling digital operation, which I think is the key to the future. And I think everyone's working to that effect here internally.
Well, Chris, I can't think of a better wrap up to this interview than what you just said. With that, I thank you again for giving us some time and chatting with us today.
Michael, thank you. Thank you to the Noble folks for your time and effort, and look forward to having another chat soon.
Thank you.
Okay, take care.